Picture this. You're at a casino, and the house keeps handing you chips. Not because they like you, but because if they stop, the entire game collapses. That's essentially what's happening between China and America right now. And the chips? They're worth $759 billion. Welcome back to Forgotten Finance, where lost money lessons come back to life. You've heard the headlines. You've seen the politicians point fingers. China owns our debt. They control us. But here's what they're not telling you. China doesn't own this debt because they're winning. They own it because they're trapped. And understanding why changes everything you think you know about the global economy. Let me hit you with a number that'll wake you up. As of December 2024, China holds $759 billion in U.S. Treasury bonds. That's billion with a B. Sounds terrifying, right? Like China's got us by the throat? Here's the plot twist. They've been desperately trying to reduce that number for years. In fact, they've been cutting their holdings for 9 straight months in 2024 alone. Back in 2013, China held over $1.3 trillion in U.S. debt. They're down by almost half. So if China's trying to get out, why did they get in so deep in the first place? The answer isn't what you think. It's not about power. It's not about leverage. It's about plumbing. The boring, invisible plumbing of global finance that nobody talks about at dinner parties, but controls everything in your wallet. Here's how it really works. China sells you an iPhone. You pay dollars. Apple pays its Chinese factory in dollars. But here's the problem. The factory workers in Shenzhen can't buy groceries with dollars. They need yuan. So the Chinese company goes to their bank and says, exchange these dollars for yuan. The bank goes to China's central bank. And suddenly, China's central bank is sitting on a mountain of US dollars that just keep piling up month after month, year after year. Now, what do you do with all those dollars? You can't just stuff them under a mattress. You need to invest them somewhere. And here's where it gets interesting. There's really only one place on Earth big enough, safe enough, and liquid enough to absorb trillions of dollars: US Treasury bonds.
Think about it. China can't invest in Chinese bonds using US dollars. They can't buy European bonds in the quantities they need. Japanese bonds? Not big enough. Gold? Can't store that much. Real estate? Too slow to buy and sell. U.S. Treasuries are like the money market fund of nations. They're boring, they're safe, and most importantly, you can sell billions worth in seconds if you need to. But here's the kicker. And this is where it gets wild. China doesn't buy U.S. debt to help America. They buy it to help themselves. By keeping those dollars invested in treasuries instead of converting them all to yuan, they keep their own currency artificially cheap. And a cheap yuan means Chinese exports stay competitive. Your iPhone stays affordable. China's factories keep humming. Workers keep their jobs. The whole export machine keeps running. It's a self-reinforcing cycle. China sells stuff to America, gets paid in dollars, buys treasury bonds with those dollars to keep the yuan cheap, which makes their stuff even more attractive to buy, which generates more dollars, which requires buying more treasuries. Round and round it goes. Now here's where American politicians and talking heads get it completely wrong. They act like China holding our debt gives them power over us, like they could wake up one morning and crash the U.S. economy by selling all those bonds. But economists who actually understand this stuff will tell you that's backwards. If China tried to dump $759 billion worth of treasury bonds all at once, here's what would happen. Treasury prices would drop temporarily. Interest rates would spike briefly. And then the Federal Reserve would step in, buy up those bonds, and stabilize everything in about 48 hours. Meanwhile, China would be holding $759 billion in cash that they now need to do something with. And guess what? There's nowhere else to put it except right back into U.S. treasuries or watch their currency skyrocket, which would devastate their export economy overnight. The Pentagon actually studied this exact scenario back in 2012. Know what they concluded? China using treasury bonds as a weapon would do more harm to China than to the United States. It's not a gun pointed at us. It's a gun pointed at themselves. In fact, some economists argue that if China did sell off their holdings, it might actually help America. How? A cheaper dollar makes American exports more competitive. It brings manufacturing jobs back. It reduces the trade deficit.
China keeping the dollar strong by buying our debt actually hurts American workers in manufacturing. But wait, there's more. Remember how I said China's been trying to reduce their holdings? They dropped from over 1.3 trillion in 2013 to 759 billion today. Where's that money going? Into gold, into diversifying their reserves, into anything that isn't as dependent on the US dollar. Because here's what China figured out. Being the world's factory comes with a curse. You end up with too much of your customer's currency, and you're stuck in a relationship you can't easily leave. Think about your own life for a second. Imagine you run a business and one customer accounts for a huge chunk of your revenue. They pay you in gift cards to their own store. What are you going to do? You're going to keep accepting those gift cards because you need the business, but you're also going to try to diversify your customer base because being dependent on one customer is risky. That's China's situation, except instead of gift cards, it's Treasury bonds, and instead of one customer, it's the world's largest economy. Now, here's what really matters for you, sitting at home in America, wondering what this all means. First, China owning our debt isn't the crisis politicians make it out to be. Japan actually owns more than China does, at $1.1 trillion, and nobody's freaking out about that. In total, foreign countries own about $8.5 trillion in U.S. debt, which sounds like a lot until you realize that's only about 30% of our total public debt. Americans own most of American debt. Your retirement fund probably owns some right now. Second, the real risk isn't China dumping bonds. The real risk is America's own fiscal policy. We're borrowing more than we're earning. The national debt keeps growing, and eventually the math stops working. When the U.S. government is spending more on interest payments than on defense, which is projected to happen soon, that's not a China problem. That's a Washington problem. Third, this whole system only works because the U.S. dollar is the world's reserve currency. But that status isn't guaranteed forever. China's working on alternatives. The BRICS nations are exploring their own arrangements. Every time the U.S. uses economic sanctions as a weapon, other countries get more nervous about holding dollars. The plumbing that makes this whole system work depends on trust and convenience. Mess with either, and things could shift faster than anyone expects. Here's the bottom line, and this is what Forgotten Finance is all about. The narrative you're fed is usually missing the most important parts. China doesn't control America through debt. America and China are locked in a financial codependency that neither can easily escape. It's not a war. It's a marriage where both sides are kind of miserable, but divorce would be even more painful. The real power isn't in who holds the debt. The real power is in who controls the currency that debt is denominated in, who has the deepest financial markets, and who can print more money if things get ugly. On all those counts, America still holds the cards. For now, China's trying to play a long game, reduce dollar dependence, internationalize the yuan, build alternative systems. But here's the thing about long games. They take decades, and a lot can change in decades. The Chinese economy is slowing down, their population is aging, their export model is under pressure. Meanwhile, America keeps being America, innovating, attracting talent, and benefiting from having the deepest capital markets on the planet. So next time someone tells you China owns America because they hold our debt, you can smile and think about what you learned today. They're not the puppet master. They're just another player trapped in a game where the rules were written in English, the board is in New York, and leaving the table costs more than staying in. That's the real reason China owns so much U.S. debt. Not because they're conquering us, because the global financial system left them no other choice. And understanding that difference might just be the most important economic lesson you learn this year. If this changed how you see the world economy, hit that subscribe button. Because here at Forgotten Finance, we dig up the money lessons that everyone forgot, or never learned in the first place, the ones that actually matter. See you in the next one.